All right. Hey, everybody. Bennett McDowell with TradersCoach.com. Great to be here for client support. Today is April 12th, 2023, and we are recording it. And the recordings, of course, are all in our special area, our hidden area in YouTube. So make sure you know how to access that through the Customer Hub area. All right, one quick announcement. Tomorrow, for those of you that are Oracle subscribers, we've got a webinar. The monthly webinar is tomorrow. So I want to remind you of that, and we'll send out an email, of course, later on today as well for that. So anyway, there we are. Okay, so if you have any questions, start typing them in, and I'll get to them during the session. We're only here for about a half an hour, so don't be shy. Type them right in there, and I will get to them. Let me just cover my administrational items that I got to go through, and then we will take it from there. Okay, first thing I got to go over the risks involved in trading. Like I always say, without that risk, there is no opportunity, right? So the two go hand in hand. We want you to be aware of the risks. We work in a realm of probabilities when we trade the financial markets. Whenever you develop your edge or your trading style, it's never going to be right 100% of the time. And that's because of you base your edge off the probabilities. And your edge needs to have structure to keep you within that range of probabilities. So that's really important. If you need help in developing that, that's what our coaching program is all about here at TradersCoach.com. We help you develop your edge and trading rules. And they have to include risk control. They have to include entries and exits. They have to include how your initial stop is going to be set, where you're going to trail your stops and things like that. All right. So also, if we look up any stocks or talk about any ideas today, please run those by your financial advisor before implementing them. We don't know your personal situation, they do. And there's many factors that go into that. They look at your age, they look at your tolerance to risk. They look at, for example, your short-term financial needs and weigh that against what you want to do. So definitely check with them. We don't know that information about you, and they do. Also, too, trade with money you can afford to risk, called risk capital. That's really important. You don't want to be have any additional fear in the markets because of money you shouldn't be trading with. And then finally, know how to do risk control. And that includes trailing your stops, initial stops, and also how to calculate your trade size. And we're I would say we're probably the experts in the field on that. And we have been for probably 20 years. And I have written a book recently last year here called Money Management for Traders that takes the key concepts out of my 2008 book called The Trader's Money Management System and really hones it down so you can add that as an edge to your trading rules. If you haven't gotten it, check it out. The link is on our website under books, education, and you can get that. I'm also pretty excited about the new book coming out called The Art of Trading, second edition. This is going to be quite a book. It's going to have a lot of new information, and we've also included many of the software tools that we've developed since our first book came out a while ago as well. And then, of course, you know, we're big into Elliott Wave, and McGraw-Hill asked me to draft a book on the Elliott Wave, which I did, and then also to Survival Guide for Traders. So you can get these books on our Amazon page. That's probably the easiest place, but they're available at all bookstores as well. All right, when we talk about trading tools, we talk about tools that I developed over the last 36 years of trading the financial markets. And basically, we have software tools that work on charts. That's up here, the ART, OWL, PTF, TLM, ERI. Many of you, of course, own that already. And then we have the scanners. This is how we find stocks to trade. And then also down here is our risk control software that keeps the structure in line for risk control. Kind of a key thing on the scanners, not only do they find stocks, but scanners are a great way for you to kind of declutter your platform. A lot of people, you know, have a ton of charts open. It takes a lot of resources, but if you have the scanners with the indicators that we have running in them, then you're in pretty good shape, all right? You don't have to have the charts open. So many different ways you can use the scanners, not only to find stocks, but to simplify your work layout. All right, how many people using TradeStation out there today? Any troubles with TradeStation? Guys doing okay with that? Quite a few using the TradeStation platform, great platform. We have all our scanners programmed for TradeStation as well. You can see those here at the top, and then charts here. How many people are using NinjaTrader? How many people are using NinjaTrader? Okay, good. Quite a few there too. All right. Both platforms, great platforms, as well as multi-charts, MT4 and MT5 and things like that. All right. Fantastic platforms, all of them. We're probably going to program only for platforms that we feel are the best ones and most people use, and we've done that. So that's kind of the deal. If you're running our scanners, okay, or not our scanners, our risk control software, those work as independent software, so they do not require a specific charting platform. But what I think I would suggest to you when you lay out your charts, lay them out so you'll leave enough space for the risk to reward calculator or the trade size calculator, depending on which one you're using, and have enough space there so you can see it, because if you get it hidden behind a chart and then click on the chart, it disappears. And then you have to go down the toolbar and find it again and bring it over. But if you have it here, you can click on the chart and it's always there. So it's really handy that it doesn't disappear, but you have to make a little space for it. And if you're using TradeStation, right, just bring up the TradeStation platform and adjust the window to allow enough room for the calculator, okay? Same type of thing. So no matter what platform you're using, you can create a little cubby hole for that calculator. Or if you have multiple monitors, you can if you just choose, you can put the risk control software on another monitor. That's simple as well. All right, so any questions for this week? Anybody needs to cover? Any new users out there? Anybody on a trial? Let me ask, anybody on a software trial?
I'm going to jump in.
Yeah.
Okie doke. So Laurent, I see you're in the house, and I know Laurent is on a trial and he's working on a lot of our software. So he's joined you in the day trading room.
And Laurent, you actually had a question, I think, yesterday you were going to ask me. So make sure you ask me that today, okay? Maybe you found out the answer. I can't remember. But
so maybe just go over the art software, PTF and TLM. That'll kind of help give an overview.
Okay, so let's talk a little bit about the art software here. I think what I'll do is let me bring up a whiteboard here real quick. So the art software basically forms in pockets of the market where you have a move up, a pullback, and then another move. This is a fairly common trending pattern with a low one here, okay, a low two here, a high one here, and then when prices get above the high one, that of course is your high two. And what's the definition of an uptrend? Higher highs and higher lows. So right away, by the pyramids forming in these pockets that have this pattern, you've already met one definition of the trend. So I'll put that up here. Now, another interesting thing is that the software behind the scenes is calculating the momentum on the left-hand side of the movement from low one to low high, and then looking at the momentum as it moves down from high one to high two. And then when it starts to move back up into the high two, it's looking at the momentum again. And on the third price bar after the bottom, if the momentum part of the calculation suggests that the momentum is in the realm of the potential trend, in other words, it's a positive increasing momentum, especially from low two to high two, then the pyramid is going to draw a yellow color. And so, or whatever color you want to put it at, because you can change the colors. But if you have this configuration, what it will do is it will go ahead and print on your chart a yellow pyramid. Now, the reason why it's yellow is because we call that an unconfirmed pyramid. Now, you're going to know that the pyramid is a potential bullish one because of the point. The point always points in the direction of the potential trend. But the definition of an uptrend has not been met yet. Why? Because this is low 1, this is low 2, this is high 1, and this is not yet high 2 until it clears here. So when it clears the top of the pyramid, that's when it will turn from yellow, in this case, to green, and you'll see a P at the bottom of the pyramid. This is where you want to enter the trade, right here. Okay, that's where you want to enter it. And then your stop goes right under the bottom of the pyramid, usually a tick under. Now, a lot of people will say, well, why don't you want to enter here? And the reason for that is you have not completed the definition of an uptrend. You've got to get above here first, right? Because what could happen is if you enter here, you could get caught going in the wrong direction. Market could come back down, and you may even get a pyramid pointing down at that time. See? A lot of times on the art software, especially in a bracketed market, we'll see something like this, where you'll have one possibly up, one possibly down. And so it's kind of cool because as the market breaks to the upside, this pyramid down here will disappear. So if it's yellow here, but prices go above the base leg of the pyramid, which is the flat part, that'll disappear, and then this one will kick in. This one will paint, and therefore it's a long trade with the stop there. So that's why the pyramids are designed specifically, all right, to keep you out of markets, all right, that are not yet decided if they're up and down. And that's kind of an important aspect. All right, you can see them forming here. Now, there's something also called a P pyramid. So here's this. P pyramids form when an active pyramid in the opposite direction has not been stopped out yet. So in this case here, when prices went above this little apex here, let me just zero in on this so you can see this. And it doesn't matter what time frame, this is just an example. But you can see here, when prices got above here, they needed to get above here in order to have this pyramid now stopped out. So it's a bear trend until that's stopped out. Then once that's stopped out, then any pyramid after that will be a P pyramid like this one and so forth. But this will be a P pyramid, an MP pyramid. So an MP pyramid stands for a movement, okay, in the opposite direction of the primary trend as designated by the P pyramid. So when you see a P pyramid, think of primary trend. When you think of an MP, it's a minor pyramid and therefore a correction only at that time in the dominant trend. Now, we have some rules associated. So if you're taking a trial or you're using the software, once you have 4 pyramids in a row, and you think you have a major bottom here, you can take an MP, but you have to have a green owl. You cannot have a red owl. So in this case here, if you were waiting to go long, you can't do it on the MP alone until the PTF and the owl are both green, and prices would have to get above the P pyramid. So notice that they almost coincided perfectly. Prices in this range here went above the P pyramid, we had green, and look, the PTF went from red to green. You could go long right there. All right, and put your stop under the pyramid. MP pyramid, that is. Okay, so there's lots of little rule bases. Now notice this one here. Okay, here's one where we had one here. Okay, but you only had one pyramid here, so you wouldn't even consider going long on that one. And besides, this was kind of red down there, but that's one of the rules. One pyramid does not allow you to go long on the MP. So there's a whole set of rules, and it's all in the art home study course. And you want to kind of review that when you're taking the trial. Okay, so that's kind of the pyramids. And what we do with the pyramids is with each additional pyramid that forms, all right, that's how we move our stops up. Okay, so kind of is a neat way to move your stops up that tries to keep you in the trend as long as possible. The next part of the ART software, and there are 3 studies in the ART software. So you have the pyramids, right? We call those the ART pyramids. We also have something called 1Bs and 2Bs. And these are called ART reversals. And ART reversals are basically pivot points in the market. However, they aren't your normal pivot points. It's looking at the price structure in the formation of what occurred before the pivot point occurred up in here. And also the momentum, once again, kind of like the pyramids, we look at the momentum in those price bars, and we want the momentum to be at a certain level in order to give that pivot point a high probability. And if that happens, then you get a 1B drawn here on the pristine pivot bar. Now, also too, ART reversals are usually when they're triggered. So if you have a 1B here, this would be bearish because technically the entry on the 1B would be down here and the stop would be here. However, if you were already long from a previous pyramid, this can also be used to scale out of partial positions. So there's many different ways you can use or combine the 1 and 2B reversals to substantiate your trading style. Now, when the level is broken, either on the top or the bottom, it usually means the prices will move in that direction for 2 to 5 price bars. So we have a lot of people scalping the market just on that information. They wait for a 1B, 2B, and then they go short. As long as it's 2 price bars, then they trail their stops and get out and wait for the next one. Sometimes you get 5, sometimes you get 2. That's usually what happens. And also too, on a 1B, when that forms, like a 1B here, if you go above the 1B, that's as strong as going below it, because that means the trend is going to continue for another 2 to 5 price bars. If it goes down here, it's going to correct for 2 to 5 price bars. So that's a 1B. And so in order for this to be a bearish 1B after a move up, this price bar has to be bearish. Okay, if this was a bullish price bar, as in this scenario, and the market moved down a little bit like this, that's not a 1B because it's not a bearish price bar. But if this is a bearish price bar, then you've got a 2B. And the 2B means that 2 price bars were considered in this pivot point, not 1. And the reason we want to make sure we acknowledge both price bars is because we want to make sure our stop is always set at the top. And so in a 2B, one of the 2 price bars, either 1 or 2, have to be the top of the pivot. But the second price bar and a bearish one has to be bearish. If it was a bullish one, you know, the opposite direction, something like this, then this price bar would have to be bullish over here. And that would be a 2B down here. And again, same rule, 2 to 5 price bars, whichever way it breaks. And the signal bar in a 2B is this price bar, because sometimes the 2B is also an inside price bar. Sometimes it's not. So it's always good for 2 to 5 price bars. So that's the 1B and 2B. One more thing is, have you heard the ERI? The ERI is our emotional reader index, and it measures fear and greed. And whenever you see a fear or a greed bar, it's very similar to a art reversal. So a lot of people use these to scalp. So when you get an actual fear or greed, let's say this was a big move up and we have a fear bar or greed bar here, then the chances are if the greed continues, it'll go above here for 2 to 5 price bars or down here for 2 to 5 price bars. And greed bars aren't like art reversals. They don't always form on pivot points. A lot of times they'll form in the middle of a move when it gets a certain distance away from the trend line, because that means there's manic movement in the market because it's too far from an orderly trend at that point. So if it goes above, it's good for 2 to 5 price bars or below. So a lot of people use the ERI to scale out of the markets and to scalp trade as well. A lot of different ways you can mix and match these based on your style of trading. Okay, so you'll see those at times as well. And this lower line here shows you the greed and fear at the bottom. You can see the little greed bars here. Okay, so that's kind of how those work. So, you know, basically that's the ART software. It has one more study called the ART color bars, where we color the price bars a little bit differently than what you'll see out of a package. Let me just cover that too. So what we do, and if you think about this, if you look at a normal way in which software distinguishes between bullish and bearish bars, what it usually is, and basically same thing with candles, but usually where the market opens is the left side of the ladder, or the open high and low price bar, and the right is going to be the close. Okay, so that's how those usually work, right? Okay, when we do this, we do it a little bit differently. So over here, let's say you had a situation here where you had an open here, you had a big movement here, and then you had a close here. So if you were using the normal way in which most platforms distinguish bullish and bearish, this would be a bullish bar, right? And the reason for that is the close is higher than the low. In our approach, the ART color bars, which is a study that you get with the ART software, if you have a situation like this is going to be a bearish price bar. And let me tell you why. So this is the open and this is the close. Think about it. If you had an open here and the bulls drove prices all the way up here, but then the bears came in and closed it below the 50% mark on the bar, then who's really in control at the end of the price bar? The bears, right? So we would color this red, whereas most standard packages would color this green. Now this is a big deal because when we talk about ART reversals, reversals are using the way we determine a bullish and bearish price bar, and that's also going to determine when an ART reversal shows up. Okay, whether it's a 1B or 2B or not at all. So big difference. Okay, and that's the ART software. Now, of course, we have other things. We have the OWL down here. This measures momentum and also helps us with the Elliott wave at times, okay? What we do is we have a look back of about 144 price bars on the wave 3 count, and that's how that works. If you get into a complex correction, what we have found out is usually the wave 3 will show up sometime in a C wave or one of the impulsive waves in the correction. We also have an extended look back feature that will find the highest owl on the history you have loaded for the major wave 3. All right. So by looking back 144 price bars, we're kind of focusing on the current wave 3 in whatever configuration of a higher time frame that could be. Now, the next one is the PTF right here. All right. This indicator, I love this indicator too, because this is measuring whether the market has potential to make another high. It has a 75% accuracy rate. So in this case here, it's saying, all right, this high is not the highest high. All right, so eventually it will return and go up. So when you use this with fibs, Elliott wave, and pyramids, of course, then when you're about to go into a correction, and this is green, you know at that fib level, go long because you have a good chance of reaching that target. Okay, so it's really helpful when you're deciding what to do in terms of, should I stay with the trend, get out, or get out and get back in after it retraces. The PTF will not tell you the length of the retracement or the time of the retracement. It will only tell you that whatever created that particular green or red, there's a 75% probability it will return and take that out. And so that's kind of a good thing to know, especially when you're thinking about scaling out, things like that. All right, this is measuring momentum. Of course, I forgot to mention that. The owl measures momentum. This is the trend line master. Notice I don't have any trend lines on this, but I have them here. So this tells me what the trend is currently doing, and it's a bearish trend down, okay? And then this is our greed and fear index down there. If I wanted to add the lines on here, I could do so, okay? So the trend line master allows you to add trend lines that are automatically drawn like this, and then also a ribbon down here. So if you don't want to see all the trend lines, you just want to see the ribbon of what it's telling you, it's great. So here's how I use these things. When I'm about to take a long or short trade, I always wait for the owl to agree with the pyramids. Okay, soon as it does, and if the pyramid has not been stopped out, I can take it. Or if it is red at the time prices go on the other side of the apex, then I can take it. If I have a green PTF, the only time I can go short on that is if I'm sure I'm in a wave 4 correction and I have enough risk to reward to the corrective level. 90% of the time, I never trade against this, okay? And that's the three main things I look for when I take a trade. When they're in alignment, the trade has an extremely high probability of success. The trend line master is great to make sure it's the right color, bullish or bearish, for when you do an add-on. So you want to take a look here at momentum, and you want to take a look here for add-on. If this is yellow, it's neutral. So you can go long or short on the yellow, but you don't want to go against it as a general rule, okay? So a yellow PTF, like here, Frank, is neutral. It's kind of like if you had a trading buddy and you turn to him and his name was Mr. and Mrs. PTF, and it was yellow, and you turn to him, what should I do? He's going to shrug his shoulders. He goes, I'm neutral. Don't know. But if it's green, he's going to tell you eventually more highs are coming. That's how it kind of works. Okay. Vice versa, if it's red, more lows are coming. That's kind of what I wanted to cover. So that gives you a kind of good overview on the actual charting software. Probably next week we can go over the scanners up here, because we have a bunch of those. But I like to keep these sessions for about a half an hour. Okay. Any questions on that? Did you find that helpful? One more thing I'll add in is if you're getting ready to go long on a pyramid, all right, you know where, once it's forming, let me just do this. Once it's forming, okay, and it gives you the yellow pyramid and prices are right here, you can go ahead and grab the trade size calculator or the risk to reward calculator. You know your entry is going to be here. You know your stop's going to be here. And that's all the information you need to know in addition to your account size and the amount of risk you want to take to calculate your maximum trade size. So you can get all ready. That's why we like to tell you, if possible, when the market is forming a yellow pyramid, we like to give you a heads up on that. Now, sometimes you'll find that the market does this and then moves really quick. And the third price bar isn't, until here. And the pyramid won't turn yellow at that time. It'll just go immediately to green and give you a P. Then you need to grab your trade size calculator and see if you still want to go in here and your stop here. So you still got to do your trade size based on wherever you can get in. And then you want to do your risk to reward to see if you're okay on the trade. So sometimes in fast moving markets, that just will abruptly eliminate the yellow and go right to green. Okay, you get that sometimes. Not many times, but you do. There are 4 colors, correct, on the TLM, and one is a light green, one's a dark green. The light green indicates at the time, it indicates a shorter term trend identification. You may also have a long term, but the shorter term one, it turns a light green to let you know there's a short term trend. So in some cases here, best way to illustrate this is, if you have a move up here like this, all right, and then a move down here, and then it restructures here, you've got 2 trends. You've got one long term like this, and then you've got one short term like this. So this will be a light green over here. This will be a dark green here. And you can have 2 at the same time, but the light green is going to take precedence over the dark green. And then once this is broken, then it will revert back to the dark green. Vice versa for the red. So you have you have 2 shades of red, same type of thing, just, different trends, that's all. So you're correct, you have 4 colors on that. Now, one thing that's kind of interesting, after we designed on the Trendline Master, what we did is we designed after a certain amount of history to take some of the old trend lines off because we didn't want to mess up your chart. So some of the colors on the history may not make sense to what you're seeing now. So always use the current color. That's what's important. Okay, good question. Oh, the trial is $3.99 for 30 days, and you get all the software. Okay, so you get the scanners, you get the charting software, and we give you the trade size calculator as well. And in addition, you get the Art Home Study course. So you learn how to use it. Now, if you're going to want the scanner trial, you need to be either using NinjaTrader, TradeStation, or multi-charts. MT4 does not have a scanner, and eSignal Scanner doesn't work with our scanners. So these are the platforms that work. Now, I suggest if you don't have any of those platforms, you go with Ninja. It's free. All our software will work, and they have free end-of-day data. Okay, so it's a great way to test the software, and it's 30 days. Okay, and let's see, don't understand the waves yet completely on the OWL. You have wave 3 and wave 5. The OWL will always find just wave 3. So when you have a situation where you're going into a wave 5, let me just see if we can any of these are kind of good for this. Hold on one second. So you always have bearish divergence on wave 3 to wave 5, but the most important wave you want to find is the wave 3, right? So if we open up here, all right, and take a look at this, give me 1 second, and bring this down here. So in this case here, you had wave 3, okay, and then you had to move down 4 and then 5, and you had bearish divergence between 5 and 3. And so that's why you always want to have wave 3. If this oscillator was just a little higher here than this wave 3 would jump over to here, but it wasn't. So this was a 3, this was a 4, this was a 5. And wave 4 is always going to have a red owl. So in a case like this, you can almost count the Elliott wave on a wave 3, 4, and 5 by just using the owl. Okay, and then it changed trend, went down again. Good questions. So that's how we use the owl to help us with the Elliott wave. And you want to make sure you're not looking at a wave 3 inside a correction on one of the impulsive waves of like C or E or something. So if you see a big move up here, then that is obviously a wave 3 because it corresponds to this, right? But then you had this 4, 5, 3. So you had 3, 4, 5. That's the end of the trend. And so now look what happened. Boom, down it went. Great question. Works hourly. Well, here, we day trade. We have day trading room. Here it is. Here it is on a 1-minute time frame. Here it is on a 15-second time frame, and here it is on a 5-minute time frame. But you can set the time frames to whatever you want. You may want to use ticks. You may want to whatever. Okay. So it works on all time frames. In fact, on this example of Tesla, you're asking specifically about the 60, right, MK? Here it is, 60. So this is the 60, this is the daily, this is the weekly. Okay, good questions. And you can sign up for a trial on our software or, talk to Gene about it. All right, let me just make sure I got all the questions. Got a lot of questions here. My pleasure. Okay, so let's see. Frank is asking, since I have a Florida and Indiana with different commuters, can I get by with one or do I have to buy a license for each computer? Great question. All right, so our software, you're allowed to use our software on one specific charting platform on up to 2 computers. So if you're using NinjaTrader and you have a laptop and a desktop, you do not need to buy another license. If you are using like NinjaTrader or TradeStation, whatever compatible charting platform you choose, you can use it on up to 2 computers. So in your case, if you have one in Florida, Frank, and one in Indiana, yeah, you wouldn't have to buy another license. So you're in good shape. Now you can also switch licenses later. There is a charge for that, but you can switch them later. A couple of years from now, if you decide to switch platforms, you can just pay a switch fee for that. Now, with these trial and with the purchases of our software, you get free installation. So our guy will go on your computer, install everything for you, and get it set up if you'd like, just like mine looks, and then create templates so they automatically load, or you can load them manually, and you don't have to worry about loading each individual study, and then it's just one click and you're good to go. Okay. Tons of tutorials on the software. Okay, tons. We have probably 500 at least recordings on client support where you see the software in action. We have probably 150 stock analysis Fridays that are on YouTube that you can look at right now. If you go to YouTube, and you'll see the software in action there. And I also look at, I also show you as on some of the tail ends of those stock analysis Fridays, we look at intraday markets too. So go to our YouTube channel and take a look at that. See if I can show you one here. Give me a sec.
And I'm going to jump in. So MK, would love to send you a link, but I don't have access to your email address. So please send me your email address and I'll get you set up.
There you go. All right, give me a second here. Hold on one second. Okay, so here is an example of one of our YouTube presentations on Stock Analysis Friday, where I actually look at the software and you can see it there working. Let me just go over here. All right, and if you go into playlists and then go to Stock Analysis Friday, I'm just showing you how to get there. This is where they all are. Okay, and here is one. Here is an example where we're day trading. Okay, 15 second, 1 minute, 5 minute. So they're all there. We have hundreds of these on there. So check them out. And part of the package, of course, once you get the software, you come here every Wednesday, and this is where we teach you how to do it. All right, let me just see if there's any more other questions here. Okay, I think I got everybody. Cool. All right, so that is it. I think I got through all the questions. Excellent. You guys did great today. Good questions. Awesome. You know, don't forget, these Wednesdays are webinars for you. Okay, these are where you get to ask questions. There is no such thing as a bad question. Because I can guarantee you, if you have a question, it's probably the same question somebody else has as well, okay? All right, I'll do one lookup for you, Frank, but then I gotta go, okay? Because we like to keep these for just a half an hour. So IWM, is that the stock you wanna look at? All right, so Frank, what are you doing on this bad boy? Looks like we had a pretty big move down. It's kind of a messy stock, Frank. You probably shouldn't really be in this one. All right, if you are in this one, all right, see this mess? I avoid this like the plague, okay? Don't like that at all. All right, you have to be successful. Here's what's happening. If you're not successful trading these little swings until it breaks out, this is what you're going to be dealing with. So you got to be really careful about that. If you're short right now, this is close to going green. You would have been stopped out on this pyramid already. If you're trading the 60-minute, I guess you could put your stop up here, but you might be getting ready for another leg up. So you got to be careful here. Okay. I'd probably take my profit, run, and look for another market. That's what I would do on that. Well, you got in, well, thank goodness you got in up here on these pyramids here. All right, but now you want to be, you should have trailed your stop here. So we would have been out already. See, look, see this pyramid here? That's your stop point. You can get out right now at the same point. Okay. So I would be out of that market. Okay, good question. On the risk to reward calculator, what you can do here, let's see what we got here. So you click on the question mark, and that's going to bring up the instructions, right? Okay, right away there's a video here. I don't know if you've seen that one yet. All right, scroll down. All right, here's general instructions on point values and futures. So make sure you go through this whole thing, because this should be enough information for you to start doing it pretty well. And if you need further help, go to our YouTube channel, go under the client support, and look for one titled risk control. Okay, and it will be in there. Okay, you see, yeah. So that's what you want to do with that. Okay, good question. Because I have done a few client supports where I've done nothing but the risk to reward and risk control. Okay, so go to your playlist and check that out. Go to the YouTube channel. My pleasure, Frank. Okay, and Lauren, if you have any trouble finding it, just give us a ticket and we'll help you with that. Okay. No, our pleasure. Our pleasure. All right. By the way, yesterday we ended up pretty well in the day trading room. I know you were there for a while to the end there, so not a bad day. We had a couple open positions, but closed them out pretty good at a profit. So all good. All right. So that I think is it. Let me just see if there's anybody else. Anybody else have anything? Going once, going twice. Gene's put a couple links up there for Elevate Your Trading about the software trial. Okay, excellent. All right, well, that's it for today, folks. Thanks for tuning in. Now, we'll be back next Wednesday. So if you have any questions on anything you're doing, whether it's the home study courses or our software, write those questions down and bring them here, and I'm more than happy to help you. Now, we do have 24/7 ticket support, email support at support@traderscoach.com. But sometimes it's nice bringing your more complex questions here because I can show you, on an actual chart and so forth. All right. So with that, I want to thank everybody for coming. Have a great week. Spring is finally starting to come, I guess. Middle of April, we're due, right? All right, so we'll see you next week. Have a good one. And we will put this recording also in the YouTube area, but you have to access it through the client support through a special link because we keep these unlisted and private. These are just for us. Okay, take care. Thanks, everybody. Bye-bye.